Welcome back to the channel, and as always, if you are copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we are going to have a look at a stock called Grocery Outlet Holding, ticker GO, with earnings coming on the 9th of May. So this is a stock that I looked actually around Q3 last year. So I think it was about October when I started looking at it. And as you can see, it did a little bit well back then, but then it had this fall and it's retesting this kind of flat 250-day moving average. And the reasons why that happened were pretty much the same that led me to keep it on the watch list, as I thought that is a stock that I had a long bias for, but never really got enough conviction to put it on. And why was that? Well, first of all, the company had very interesting projections in terms of earnings growth, and that is still the case. So when you look at its competitors, it's competing against the likes of Kroger, Costco, all the small cap companies like Chefs Warehouse, Sprouts Farmers. And across the board, this is a very formidable peer to have. The earnings growth is not the absolute highest in the sector, but it is above the sector average. The multiple is slightly above the sector without asking for a crazy valuation. But what's interesting as well is that PEG is certainly above the sector, and that's something that we like. Unlike all the players that we've just named, though, so for example, Kroger, debt to equity of more than 100%, Cisco, all the large cap at 40 billion has 500%. They also compete with Target, which is got the 75 billion market cap. Those guys have almost 120%. These guys, GO, have just about 20, less than 25% in terms of debt to equity. So indeed, it's a company that can thrive. Now, why has it not done that? Because with this kind of profile of stock, right? Less than 3 billion in market cap with revenue growth above the sector and actually is actually, if not the highest, one of the highest across the board. Why has stayed sideways? Well, there were a few reasons. First of all, back in, I think it was October 2023, they mentioned that there were some issues with their ERP system, and that led to issues in their inventory, effectively affecting their financial performance. So what happened then? The company pulled back its full year guidance. The sales growth back then was announced to be between 7 and 7.5%, and the adjusted EBITDA in the range of 248 to 252 million. However, those projections are lower than the raised guidance, but still higher than the initial guidance. So it wasn't, even though it was a bit of a problem, it was not a major problem. But it was not well received by the sector. So that, as you can imagine, for a company this young, because they haven't really been along, they haven't been around for that long, barely since 2019, certainly is cause for concern for investors. Having said that, their KPIs have been always quite positive, and they had plans to open new stores, 30 new stores to be precise, in Q4, plus 47 new stores in 2024. So the idea is that they're going to be focusing in organic growth, but also opportunistic real estate deals and regional acquisitions that we're going to discuss uh, in a minute as their pillars for growth. And that is something that they have executed on. So they continue to open stores. And then on the 15th of February, which is the candle bar here, negative, uh, excuse me, this one here, this candle bar here, they announced the acquisition of UGO, United Grocery Outlet. So that was not very well received by the market initially because some analysts came to say that the acquisition was excessive in terms of the price and that it would represent some issues for the company in terms of the capture of those synergies and uh, the lack of knowledge by company management to operate effectively those stores that they acquire. Having said that, the facts are that they are adding to the top line 125 million in incremental sales and 7 million in EBITDA. So that's about 5.6% EBITDA margin. So essentially, the market was spooked out a little bit because they felt that this acquisition that they announced here was a bit too much to chew, perhaps too expensive. And in terms of the sales, well, the fact is, like I said, that is adding, uh, just gonna duplicate here, that's adding 125 million. And how does that translate into the bigger picture? Well, so if we look at the sales, right? So let's call that 4,000. There are then 125. So that's about, they're adding a bit more than 3% of sales, which is not huge, but it's not insignificant either. So what else do we have going for the stock? Well, at the moment, my positioning in this sector is that inflation is going to remain sticky, even if the Fed decides to go ahead and start dropping rates. And the customer has suffered for long enough and has changed their habits for long enough to adapt to the new reality. And so, if you remember previous videos on Dollar General, where I was short that kind of company, I do think that the trend or the taste of the consumer is going to gravitate towards organizations like this, where they can get more value for their day-to-day staples, but at the same time, they're not going to be worrying uh, about issues that are experienced in dollar stores like crime, theft, violence. So I think this is going to be a plus for the stock. Now you look at the technicals. We have here, right, a bit of a in reverse head and shoulders, which to me signals that we could be breaking this $30 support level. So I think that is very likely. Having said that, the RSI shows that we are at the moment not doing that anytime soon. So there's arguably some pacing that we have to bear in mind to do this. And what I find interesting as well is that the short interest, which for a company of this profile, right, and this age, has been relatively elevated over the last few years. So you look at a company that's relatively new, typically around 6% short interest in the last couple of years with about 11, but that has dropped, as we can see here, since about fall last year, and it keeps dropping. So year to date, we were sitting at around 7. Over the last couple of months, that's dropped to less than 6. So what I find interesting about that is that you have the market feeling less bearish about the stock. And we have also seen that obviously the stock has been going up. But at the same time, we have some limited coverage here from the analyst community. So if we go to market beat, we'll be able to see that. Ticker GO. And let's look at the analyst forecast. So not a great deal of coverage, which presents good opportunities, right? Because there's just not that many people looking at the stock. Quite balanced in terms of the mix of opinions. But here's the interesting thing. You see how the price target has been dropping over the last 3 months. All that whilst at the same time, short interest is down and stock price is up. So what does it tell me? Well, it tells me that there's a bit of a disconnect between what investors are feeling and what are the expectations for the stock. And so when I look at the next earnings report, which is going to be taking place on the 9th of May, I do see the possibility of a result that may not necessarily be fantastic, may not be something to be high five, but it could exceed the expectations of the analyst community. And that's what it's all about when you look at trading stocks. Now, for that particular earnings report, it's not a massive figure. So they're expecting 18 cents for that EPS out of 1.17 for the whole 2024 financial year, right? So that's not massive. However, it's the preceding quarter to some bigger quarters at 32 and 37 cents. So here's what I think could happen, that whilst that could be a small beat or even just meeting expectations, the guidance for the rest of the year is upgraded, and it has already been. So we look at Market Watch. I'm not going to register right now, guys, but I had a look, and the EPS expectations have been revised up for both 2024 and 2025. So again, I do think that there's a bit of a gap here between what people are expecting and what the stock is actually going to do. Now, of course, we have to look at what's happening in the macro, right? So we're going to have to monitor retail sales, UMCSI, inflation, of course, the performance of competitors. Gas prices is also something that it will be important simply because this is a type of establishment that tends to be in suburban areas. So people do drive to buy their groceries. And so if the gas prices are too high, which I think are getting better, then that is going to deter the average consumer to go. But as we can see, they have been getting better and better with a significant drop since the beginning of the year. So that is very good. So there's a couple of things we can do here. My price target for this stock is, well, there's three bands that I've came up with. That is based on either the stock doing okay, the stock doing well after earnings, or the stock doing amazing after earnings. So that's 30, 35, and 38. And as you see, we're sitting here at just 28.24, having retested very recently the 29 level. So there's two ways we can do this. One, I can keep it on the watch list As you can see, and I mentioned earlier, the RSI is signaling to us that we're not quite there yet for an upside move. Perhaps wait until we retest the 26 level, retesting that 50-day SMA. Or what we could also do is play a calendar. And I have found an interesting structure to do that. So buy the 19th July 30 calls and sell the 17th of May 30 calls on a 2-for-1 ratio. That cost me about $500. Buy 6 and sell 3. I get exposure to earnings on both sides, and that's why I'm buying the 30 level. But if it gets to 35, my risk return on that is about more than 200%. And if it reaches 35 after the expiry of the short leg, I get a return of almost 5 times, which is definitely very decent. Also, it leaves me with the opportunity to restructure the trade if I want to do that. So you can play it either way, depending on how I see the stock moving over the next few days. Might decide to enter, or I might decide to keep waiting. I think a good entry point would be around here. If it holds above that 150-day at around 27, 27.50, that would be a good entry point for a long. So I hope you like that idea. Subscribe and see you soon.